Um, if you have questions throughout, feel free to stop me. But introduce myself. I'm Charles Peterson of Calvert Commercial Financing. I am a commercial finance broker, meaning if it's commercial or business in nature, I can probably find some type of financing for it. The residential homeowner, that is not in my world. Not in terms of financing that property, but there may be some things that can help with those as well. We'll talk about those later. Okay, so there we go. That's me. I'm a proud member of the Calvert County Chamber of Commerce. Also, I'm a member in good standing of the American Association of Commercial Finance Brokers. And I also volunteer. Well, it used to be Calvert Hospice. Now it's Hospice of Chesapeake. So it's the same hospice as Charles County and a few others. So I work with them on things. I want to talk a little bit about the state of the industry, the commercial finance industry, and why some of the tightening up you may have encountered with money, why that's happening, besides just the inflation and interest rate things. Recent happening, I'm sure everyone's well aware of the Silicon Valley Bank collapse. If you don't know, it was the second biggest bank failure in history. It was a result of a run on deposits after announcing large losses in the first quarter. What happened is they announced they had sold $21 billion in securities and posted a $2 billion in losses in the first quarter. So they had a single day withdrawal of $42 billion from deposits, and that's out of $209 billion of assets that they had. And as of the last I've heard, 60% of their shareholders lost a total of about $80 billion, and that's probably going to keep going. Part of the reason for this was they were just overexposed to one specific sector. They were heavy into tech, and especially the social media type things. And their management really lost focus, from what I understand. That having diversity, inclusion programs, perfectly fine, probably very beneficial. But if you're a bank, your primary job is being a bank, and they kind of lost focus and started focusing on other things to the exclusion of their responsibilities for running their bank. And that kind of, and then with some of the things going with some of the social media giants, some of the tech companies, it just kind of all hit them, and then they posted these losses and people got scared, because a lot of these deposits were not FDIC insured. They were above the cap. So what does that mean for commercial lending? Large banks, we're talking the really big names everyone knows, are generally pulling back on their lending. They're raising the requirements. They're tightening down quite a bit. Now, that doesn't mean money's going away. It just means that the banks are kind of cleaning their own house. Private lenders are temporarily seeing a boost. Long term, though, it's expected credit's going to tighten up. And so your clients need to be aware of the fact that, this is not 2008 where anything goes, and thank goodness for that. There's still money available, though, but we may need to be a little more creative in how we go about getting it. And they may need to adjust their expectations on things. But it is available, and private lending's flexibility is expected to be able to withstand it. There are things that private lenders can and will do that no large bank is going to do. You know, they will overlook credit issues if the assets are right, or they will overlook, you know, some other issue if strong credit history and banking history and those sorts of things. They will actually look at the story. They also want to know what's going on with the deal. So they have quite a bit of flexibility that no large bank is going to do. Next, commercial real estate uncertainty. This is nationwide. Data is from the Mortgage Bankers Association. Commercial real estate was down 10% in 2022 from 21. That means that the estimates are that commercial and multifamily estimates were about $891 billion in borrowing in 21. It was down to $804 billion in 22. And the estimates are that it could even be down as low as $684 billion in 23. But there are some caveats on that, in that there's a wait and see mentality going on right now. Property values nationwide are expected to decline due to a variety of different things. And so depending on what happens in the last 2 quarters of this year, things could change. But as it says right now, that they're expecting that. New loans have to deal with changing property values and higher interest rates, but that's normal. And there are quite a few ARM resets and refinancing based on either loan maturations or just, no matter what's going on, some people just have to sell and other people just have to buy. So there will be activity. That's nationwide. The advantage for us here is that doesn't mean the local market is down. In fact, local markets could be up even when the nationwide numbers are down. So if we focus on our area, and that's the advantage of being a locally based broker, we can sell that story to the lender. They like the story, and they like having people here that can say that, look, this is normal, or this is fine, and here's why. So that gives us quite a bit of an advantage over, say, the large national lenders. So with that as kind of the state of things going on, let me tell you about what we can do. The programs that we have, the first two I'm going to talk about are geared, talk more about the real estate because that's most germane. Commercial real estate lending. I have lending programs that can cover anything from $50,000 smaller properties all the way up to $100 million or more, and those are real numbers, obviously secured by the appropriate amount of real estate. But a common sense story-based underwriting is what they're looking for. They can expedite loan closings quite rapidly sometimes because they're the actual decision makers. These don't go to some national committee or have to fit into some particular matrix. The people that I'm dealing with are the people actually usually making the actual decision, or they are the ones who will be talking directly to the underwriter. So there's quite a bit of flexibility and power with that. Funds obviously can be used for, there's purchase, there's refinance, there's construction, even these days, development. I have bridge loans. So if there's one type of lending that's really good, but it's not going to be available, say a USDA loan we'll get to, that it's going to take 90 days minimum. Well, that doesn't mean that the sale has to take 90 days because there's bridge financing we can get in there that will take it until the final lending. They can cash out. There are some of the lending that will have unlimited, 100% cash out available. So there are a lot of things we can do. We also can get unique property types like gas stations. I have lending that will even cover infill land and very specialized real estate. The things I don't work with are the adult entertainment type properties and anything dealing with drugs like the cannabis type things. There are lenders that will. None of mine do, and I don't either. That's still a large amount of the commercial industry, lending industry, really is not on board yet with that sort of thing. So before I go on, do I have any questions at the moment? I don't know if I can see.
Good morning. You talked about the bridge loan being able to settle earlier. Can you lock in the rate on the permanent or the loan at when the loan settles, or is that up in limbo?
Those are likely whatever that rate is going to be is likely going to, like for example, USDA, that's kind of a set thing. They're going to set what rate they're going to put in. I'm not sure that's going to how much that's going to rise in that 90 days, but whatever it is, if there's a lock available, yes. I hate to say it that way.
Yeah.
But that of course is independent from the bridge financing. That would be a lender specific thing. The ones that take that long, like I said, USDA is the longest that I can think of. Even SBA's, we can get closed in 30 days. So the chances of rates rising, I know you can cross over a rate hike, but there are locks available on some of these, but that's kind of specific to what product you're looking at.
Thank you.
Charles, there was another question too. On average, what is the loan down payment?
Good question. I have, my understanding is larger banks are going up to 25% and higher. I have products that will take depending on the situation. Again, these are situationally based. Lenders have gone as low as 15% loan to value. They're starting to hike that up to 20%. As I said, things are tightening, but they're still looking at the 15% loan to cost. They'll also look at, for some of these situations, the after repair value. So they really want to know the story. Obviously, the more down, the better it is, or at least the more available. Even SBA, where you're looking at 10% down, the lenders are going to want to see more solvent. They're going to want to see that you have another 10%. You know, you're not putting every dime you have into that deal. That's going to get them quite a bit skittish. So that the borrower needs to understand that they need to make sure their financial house is in order when they go forward. But we still can get some of those, like for example, SBA 10% down. You're just going to need more cash available as well. They want to see solvency. For a regular commercial deal, some of the commercial deals, the ones that go into like a mortgage-backed security, some of those are 100% financing, but those are ones with stabilized property, refinance type thing. So in terms of purchase, expect a 20% down, whether or not that's going down or 10% down and 10% in reserve type thing. They want to have, from a commercial perspective, they want to have the best, most solvent look that they can going forward. That gives them the most flexibility with the lenders, because the lenders get a lot more relaxed seeing someone whose financial house is more in order than less. Any other questions?
Do you do anything with opportunity zone financing?
Opportunity zone, are you talking about like the set aside business corridor stuff? Or because I've run up against they have some weird residential things in these southern counties, and those are definitely not okay. But you talking
It's a
about,
federal opportunity zone program, and I think that I have a listing in the opportunity zone, but I haven't had a sale through it, and it is you have to buy the property with opportunity zone funds. So my understanding is that when you go to buy the property, you deposit your funds into a fund, and it's the fund that buys the property.
I haven't encountered that. I can ask about that. You have my email, right, Lily?
I do.
Send me
I
an email
just,
on that. And then
okay.
I can let everybody know. What I find, because that's something I definitely would have to ask.
Yeah,
ask
it's
the
a little
lender.
bit different of I'd like to know the process. Thank you.
I would too.
Charles, there was another question too, and I already forgot, I just looked at it. What do you consider a stable product?
Okay, stabilized property. That means that it's like, for example, let's say an office building. That's what we're usually talking about with those sorts of things. Is it's not something that you're in the process of trying to fill. It's something that it is in its normal occupancy. Doesn't have to be necessarily 100% occupied, but it has to have a normal occupancy for its size, location, that sort of thing, and one that is again, basically just a turnkey. Like someone could walk in and continue on. It's not one that doesn't need rehabilitation, repairs, extra development or expansion, those sorts of things. This is just as boring a property as you can think, type of thing. And I can get an actual definition and send that out. That really only matters, well, mostly only matters to really large properties in certain areas. For example, you're not going to get that type of financing likely in on a small shopping center in Mechanicsville. Okay, that's more going to be, again, like an office building, some hotels. Now you might be able to get some hotels if they're on a normal close to a highway type of thing. That's more institutional lending, which is available, but it's something that we have to really get the right fit for. Most properties are not going to go that way, and thus that type of thing doesn't matter. Other aspects of the deal actually matter far more. So let me move on to the next. If I can get this to move. There we go. Investment real estate. There is still money available for people to buy and rent, fix and flip, even construction and development, although that is tightening up quite a bit. And I would assume that has to do with concerns over the changes in demographics of specific areas. So that's where, again, that local mentality comes in play. Whereas if a lender's out of Miami and the Miami market is not doing well, they have to be shown that no, this area in this sector is doing well, and that's on me. That's my part in that. But from 50,000 up to 7 million plus financing, and if it's a multifamily, it can go that's where the plus comes in. But it's secured by 1 4-unit residential, have lenders that'll go up to 7 million for the right property. I'm not sure what that property would look like in this area, but I'm sure you guys do. But the 5 to 100 unit residential properties, they can get even higher than that. And we're talking about purchasing, refinancing. So if there's refinancing needed, if there's refinancing to enable them to pull out cash to obtain other properties, that's certainly in this ballpark. The portfolios, and even some cash out. What they do like to know is the cash out needs to be for a business purpose. If they're planning a trip to Vegas, that's not the right time to cash out your commercial property. But to do repairs or maybe purchase another business or any number of things that are reasonable. Do you have a question?
Herb, did you have a question? Because it was in the chat and then it went away.
Yeah. Yeah, thank you. With this tighter market, what are you seeing with recourse, and how much tighter are the requirements for a non-recourse loan?
As of right now, we're still looking at they're still looking at a normal credit profile, say like 650. That's usually where they're wanting to start. There are lenders that will look at 620. There are lenders that don't really care about the credit score. But you're not going to get a 20% loan to value type thing, but they will look at even challenged credit profiles. They want to, but the property's got to be good. The math's got to work out well. There's got to be good history, and there's got to be reason for why the credit profiles is what it is. But they will consider that. And with the tightening of it, some of the money is flowing more into the private lenders, because again, like I said, the institutional banks are not lending. Some are even looking at getting out of the commercial space and possibly even the residential space. I've heard talk about that. Well, the money that goes into those still wants to be in the sector, so it's going to the private. And when I say private, understand some of these actually are smaller banks. Some regional banks have private lenders as their arm to get these deals, and they understand that while they're a bank and they're good at money, they're not good at being flexible, so they have that flexibility attached. So with that, things are tightening, but for the right deal, person has good credit, or they have good assets, or preferably both, things are not nearly as tight. But they're scrutinizing some of the things that maybe they like I said, some of the lenders that were advertising just 6 months ago 10 and 15% down are now saying we want to see 20. So that's the level of tightening that we're talking about. Some of them are like, we say 650, but we prefer it to be north of that type of thing. So if you have a client that is just at those limits, we need to come up with the right story. We need to say why they're going to use the funds, what they're planning to do. Here's why this deal actually does make sense. And that's,
what are the interest rates looking like currently?
well, that's kind of a interesting question, because there's still interest rates as low as say 6.5, but there's a lot of interest rates that are north of 11. It depends on what you're doing, or what the situation is. It's not nearly like the residential world where, I remember when I bought my house and got financing, rate was pretty much king. I'm the various mortgage people were all nice people. I didn't really care. I was looking at rate. That's not really the way it is in the commercial world, and people need to understand rate may be far less important than terms, than the ability to close fast. Some of these commercial deals can require closing. It may it's not to say rates unimportant, but there's a range there. And I'm assuming those of you deal with residential, it's a much bigger range than what you're used to dealing with, because it's just with the tightening of the market. Some of the lenders that are willing to lend want higher returns. But that being said, the worst that happens is we get through the deal and they get the term sheet. They still have the right to say that's not okay, and we can go back and negotiate. It just has to do with talking to the underwriters, but that's where we're looking at. So some of the USDA and SBA, you're going to look at maybe 2 3/4 to 3.5 above prime. That's going to be pretty standard. Depending on the credit, depending on the situation, it can go at higher than that plus prime. Some are fixed, some are adjustable. The larger deals tend to have better credit rates, and that should make sense. But if that, I mean, sorry, I can't really narrow down because there's such a wide range on rates. So my answer would be the best that we can get, because after all, we do want to make this as affordable as we can for the client.
So you mentioned about being able to close in 30 days for like an SBA. Usually I figure it takes 30 days just to get the dang appraisal. Can you give a little insight in that?
Okay, I thank you. I do need to caveat that once we have the package to the lender with the appraisals, with everything that we need, and we have checklists, and we can the time on SBA actually can be really fast, because the lenders that I deal with, the SBA lenders, are the preferred lenders. They can make the deal themselves, unless the client has a felony conviction, in which case then it has to go to SBA. But I haven't seen one of those. The actual lender is making the call, and that's very fast. So the delay on it is usually with the client getting whatever it is that we need, or an appraisal, or fixing something so the appraisal comes through, or all the headaches that you people deal with. That's what usually slows down on the SBA. But yeah, the SBA, once we get everything to them and it's right, less than 30 days is not uncommon at all. The fastest I've heard of is 2 weeks. I think it was 13 days. That was not me, but that actually can happen. So the norm, it's safe to say 30 days once we get everything to them.
Charles, we have about 10 more minutes maybe,
Okay.
because we still have to do our meeting too.
All right.
I didn't have the slides you have left, but I was just giving you a little time frame.
Let me flip through these. It's just a kind of a snapshot of some of the other things we do. So if you have someone who's really close, but they don't quite have the down payment, or there's something else going on, let's talk. Because if they have a business, they have business assets, we might be able to get them through other types of financing the money they need to get the property they're looking at. Okay. So one of those things, well, first of all, here's SBA, talk about that. SBA, I think you're probably likely all familiar with. USDA, Southern Maryland, only La Plata, Waldorf, and some of those small areas around are not qualified for USDA financing. All of Calvert, most of Charles, I believe all of St. Mary's, the map I looked at seemed to indicate that, are available. So that's some additional financing, and those rates tend to be lower than SBA. It's just they take, it seems like forever to close. But we have really good lenders that deal with them and know what they're doing. So if you have something now, minimum on that is going to be over $1 million to qualify for USDA financing for commercial. But that is available. Okay, equipment financing. People don't understand a lot of times. A lot of people have bought their equipment over the years. It's own free and clear. Some of this equipment still has value for them. You have a front loader, it's like a bulldozer to me. I'm not sure what you would call that, but anything that's yellow iron, there are 1950s dump trucks that are still financeable. They hold their value. They're financiers, yeah, extremely. There are financiers that love yellow iron. Some of these trucks can hold value, and I can get a truck financed for someone with a credit as low as, I didn't even know you could go as low as 420, but it can happen. So the different types of financings have their whole different rules. But if it's equipment, if it's not real property, it might be equipment. Software can be equipment, any number of things. And so if it's a business purpose, we might be able to get some either improve their situation or pull out money for other purposes like down payment type thing.
There is a question, can
Yes.
you recommend somebody that could advise financially on mortgage equity and the best way to use it?
I would assume a more financial planner. I do know a few through the chamber that are really good. And if you reach out to me, I can certainly refer someone that way. I'm sure, like you, I'm not going to advise someone on their finances that way, but I can advise them how they can restructure, for example, their debt restructuring is on the list later on. So reach out to me with those, and since we're pressed on time, reach out to me with any other questions. And Kelly, if you could consolidate a list, I can get you the answers and go. I can talk forever if you guys haven't seen that already. I have the gift of gab. Okay, so we can refinance equipment they have, they can purchase new, any number of things. And depending on how we do the leasing, every payment can be a tax deduction, or they can depreciate the equipment. But so there's flexibility, and that would be a tax accountant question before anyone asks. Factoring, if people have customers that are slow pay, 60, 90 days more, I can get them 80 to 92% of their invoice the next day. And then the balance minus the interest charges whenever their customer pays. And it doesn't matter what the business's credit is like. It matters what their customer's credit is like. So that gives quite a bit of flexibility for struggling businesses. And I also have medical financing that same way. So if you have doctors that are complaining about those billings, we might be able to help them quite a bit, which could free up capital for them to do other things, maybe move to a better location, those sorts of things. Church financing. If you have a church that's coming up with a balloon payment, for example, or needs refinancing, needs to move, I actually can get a church financed. I can get them financed for buying a property or refinancing property, and I can get them financed for their equipment inside. And that's getting more and more rare. More and more banks are not dealing with churches anymore. So if they put in a bind, reach out to me. securities-based lending. One of the only programs in the country is this one where we can get a line of credit based on the value of the portfolio. It's not selling any of the securities. It's not restricting. They can still buy and sell securities. They just have to keep the same value. Rates are low. It's not based much on their credit. It's based on the value of the portfolio. So if you have someone who has a lot of stocks and bonds and that sort of thing, they might be able to get a line of credit based off of that could be beneficial to them without having to cash in or those sorts of things. And no, I don't know about crypto yet. I can ask. I don't know if that's something they will consider. Working capital for businesses that need to continue operations, but things are getting tight. Reach out. I can get unsecured or secured loans, even if they have low or damaged credit. If the business is sound, including restaurants, reach out. There's programs available to help businesses. Other programs we have: business term loans, debt restructuring I talked about or mentioned, unsecured loans and lines of credit, the medical business financing, acquisition. If someone wanting to buy a business or a business wanting to buy a competitor type of thing, I have financing for that. And then commercial bridge loans. So with that, I kind of blaze through those. I do have secure application available, and that should be the QR code for my website, but it's just calvertcommercialfinancing.com. And there is a number there, and Kelly can reach me if you need my cell phone number. Kelly, I believe you have that, and reach out to.
Can I send out this PowerPoint to everybody?
Yes, this is. I'll send this to you.
Perfect. And I'll send it out to everybody. They have your contact information. There was one last quick question. Do you finance in Talbot County? How far do you finance in Talbot County?
I finance in, I can't say, in 47 states, all of Maryland, yes.
You're good, Rebecca.
Yeah, we're good. And some of those other states I do finance somewhat, but there's some lenders that don't deal with them. So if that's it, reach out, and I'll send Kelly the presentation here. And all I ask is if you reach out to me on, I believe you can text or fax to that number as well. If you reach on my cell phone, just make sure you let me know who you are, because I don't want to not answer your call for some reason. So maybe reach out first with an email. Thank you very much for this opportunity. Sorry that looks like I've gone a little long.
No, you're fine. You're absolutely fine. Thank you so much for coming. This is a big topic right now, so we're very glad to have you. And hopefully we'll have you back maybe in the future for some more updates. Anytime you guys are ready for more pain. Perfect. Thank you so much, Charles. You have a wonderful day.
Thank you, Ms. Peterson.
Thanks, Charles. And if you find something that you think might be important information for this commercial committee, please feel free to reach out to us as things, move, because we sure appreciate your input.
I will do. It's great talking with all of you. Have a fantastic day. You too. Thank you so much.
Thank you, Ms. Peterson.
Hold on 1 second, guys. Oh, that's part of the changes. Sorry, wrong one.